So as you can see here, I have the majors on my screen right now. If you are going to take the approach that I take, which is, holding a position for a longer period of time, rather than just scalping the market, then these charts are not your livelihood. In fact, the only reason why these charts are here is to give you an entry or an exit point on the general direction of the currency. If you're a day trader and you spend 10 hours of your day in front of the chart trading noise, then of course this is your whole life and you should just marry it already. Just joking. Like I said, I have no beef with day traders. Okay, so if you're a position trader, your livelihood is actually this economic data releases for the week. For me, I think if I had to pick three events that are really important to me, right here, this is my first go-to. So I probably won't be placing a trade until Tuesday when this number comes out. Pound Consumer Price Index. This is pretty much like their spending data for Great Britain, or in other words, inflation, or in other words, the most important thing ever. This is pretty much what the central banks look at to determine whether or not they're gonna, cut rates, leave rates, or raise rates. So that's something I'm going to be paying very much attention to. My number two would be Australian employment change. This is important, and we have the Bank of New Zealand rate decision. They're going to leave rates the way they are, in my opinion. That's the way the market's priced it into. The Bank of New Zealand is very dovish. They want a lower exchange rate, and their economy isn't that well. So I'm not really interested in this. But if you are trading that pair, then you definitely want to wait till after this event to trade, and nobody's going to be placing any aggressive bets on that pair yet. And number three would be Canadian inflation. We have Japan inflation numbers, very, very important. Japan has had a pretty big problem with reaching inflation for a while. They're like one of the only few countries that had a deflation problem for the longest time. So I would like to see some higher inflation numbers, but not expecting much. If this isn't, what the number is, which it should be, then you're going to see probably a 200 pip move, like right off the bat. But like I said, it's most likely going to happen, and the market's already priced that in, so I don't really expect it to do much damage or whatever. And if you're wondering why I don't trade the actual rate decisions, it's because number one, I would never trade an event like that live. Way too much volatility and just way too many exchanges of orders at the same time. It's not really, like I said, I'm not a day trader. So if you're a day trader and you love volatility like that, then go wild. And also, like, rate decisions are important. Like I said, you should always watch them, like, just in case they have a surprise and they do something that's unexpected, because that would definitely drive the currency. But for the most part, like, if a market prices in a rate hike or a rate cut or a rate stay, they're most likely right. Like, that's why if they're wrong, it creates such an epidemic, because everybody already expected that. Like, everybody is pricing that in. So it's good to wait until these numbers come out, because you're not going to see any bank, add liquidity to the market when they're uncertain on what the central bank's going to do. So we have three pairs: pound, Australia, and Canada. So those are three potential trades for the majors, and maybe six others for the crosses. So we have potentially nine trading opportunities. Maybe three or four of them are good. So we're looking at taking three or four trades this week. Euro dollar, I'm not really interested in that right now. We're obviously in a clear uptrend, but to me, I am more interested to when price reaches anywhere from 121 to 122, this little range right here, because like you can see on this trend line, I'll be looking to reload my long over here. We're having a trouble with the 100% Fibonacci level breaking, which is, in other words, the 125 level. So we have one, two, three touches. It doesn't want to break this level. Hopefully when I can reload here, it shoots up. But like I said, I'm not really interested in that pair right now, because we're in a short-term downtrend. It is confirmed because we have one, two, three touches. So I'm looking for price to reach this trend line, and then upon the confirmation that it doesn't break lower, I'll be looking to reload my long. And you may be wondering why I wouldn't just wait for a price to reach up here, which is closer, and then I short it. And it could be a good opportunity, I'm not gonna lie, just because the trend line looks solid. But I would never trade against the trend, in my personal opinion. Like we said, the trend is up. And the reason I would never do that is because the trend is the path of least resistance. So I'm always looking to trade with the trend, not against it. But like I said, I'm not really interested in that this week. I probably won't trade it this week. But right here we have pound dollar, which interests me a lot. As you can see on the daily chart, we're in a clear uptrend. On the weekly chart, this area right here, this is pre-Brexit levels. So I'm looking for price, after Brexit tanked. But I'm looking for price to go back to where market should have price, which is around 150 in my opinion. So I do think it's going to reach that, and I'll be looking to reload my longs as the opportunities come. Like I said, on the daily, we're in a clear uptrend. If we go closer into the 4 hour, this is where things get interesting because um, as we have these two green trend lines, which are confirmed, one, two, three, four, five touches on the bottom. So I'll be either looking to reload my long around the 138 level, or if this trend line proves to be significant, around over here. So that could be little under 139 or even 139 as well, because this whole week, I mean, pound's been pretty strong even though there's been a lot of USD weakness. It's been holding that 139 level like a G. So they're doing pretty good. I'm really interested in this pair. Right here we had this downward momentum trend for a while, since the beginning of the year pretty much. So it just broke that last week. And I did trade this last week actually. I didn't make that much. I made like 60 pips, but I was testing the waters, and now that I know that this support is holding, I'm really interested. So we saw a nasty rejection right here. So this is proving to be a new support level trend line, and if it can, prove that this one can be significant or this one continues to be significant, I will definitely look to be reloading anywhere from 138 to 139. So this is the zone I'm looking at for next week, especially if inflation is high or expected to be high after, pound data comes out on, I think it's Wednesday. If that's, like, for example, like how I would trade this is I would never trade this before the economic data comes out. That's first of all. So let's say hypothetically, USD is gaining some strength Monday, Tuesday. Price goes to 138.80 and it's testing this level and it bounces off, right? So what I'll be doing is waiting for that retracement before the economic data release. And if it's high, so the expectation is 2.8, but let's say it's 3%, right? If it's high, I know inflation might be something the Bank of England may have to deal with. So I would be looking to get long on some pound appreciation. And like I said, I'm basically looking at my chart for entry and exit points only. I have no desire to look at this for more than 5 minutes. I already have my line set up. I already know where I would enter the market or where I would exit the market. So if I buy in at 138 or 139, I'm looking to sell right here at 142, because that is the weekly resistance here. 1, 2, 3 lines. So I would definitely be looking to sell around that point. And then once we break through there, then we revisit the analysis and we look at other opportunities. So for Australian USD, we already know we have the employment numbers. This is a little bit different from my analysis on USD because I do think that USD will lose momentum. I do think USD will lose strength in the long term. However, if you look at this chart right here for Aussie dollar, it's not really an impressive chart. It's not a trending market. It's had trouble breaking this 80-cent level, so I don't expect it to go much higher. And like I said, it's not a trending market. It's more of a rangy market, and I have no interest for that. So I'll be looking at the employment numbers maybe for a swing opportunity, but we do have this support line that was breached on Friday. So perhaps I would like to see price around 175, or I'm sorry, 75 cents. That's where I think price belongs. So perhaps after 75 cents is reached and we can get a nice bounce, I would go long again. But as of right now, Aussie dollar does not interest me. Same thing for New Zealand dollar. Uh, if you look at these charts, they're pretty much identical. New Zealand's a proxy for Australia in a lot of senses because Australia is a bigger economy and they're so close together. Um, but unless dairy auctions come out better than expected or something unexpected, I'm not going to be trading this pair. They had GDP figures come out last week, which were under expectations, but I'm not interested. I would be interested only if we can reach to 70 cents, which I do believe price deserves to be at. If you look right here, this trend line is really relevant. Um, New Zealand dollar is way too high as an exchange rate, in my opinion. Even the Bank of New Zealand wants a lower rate, and they're very dovish. So I'll be looking for price to go around 70 cents, and then I'll reload my long there. USD Japanese yen. This is where this gets interesting, because if you look at the weekly chart, you can tell that this pair is a ranging market. It always is. It always will be a ranging market. The whole nature of this pair is to be a ranging market. So, I mean, money is only moved into yen when there's political or, financial instability in the markets or something. So, we're seeing something different now because if you look at the daily chart, we've seen this range for such a long time. And if you buy at the bottom of the range, and you sell at the top of the range, that's fine. I do it sometimes. Like the range for the longest time was pretty much 114 to 108. Like you would buy at 108 and you'll sell at 114. Everybody did it. It was an easy way to make some cash. But now we're in a really pretty strong downtrend. I mean, since the beginning of the year, the yen has been appreciating, and I do see it continuing. However, because of the nature of this market, I'm not really that interested. Here and then I'll bank on yen when there's uncertainty in the markets, but I'm not really interested right now. I would be interested if we can break this support line right here, um, because then that would open opportunities for 100. Because if that's the case, if the market really does want a higher yen, which they could, I'm not saying it's impossible, but I don't know. It's difficult to say right now because of the nature of this exchange pair. And like I said, there's two opportunities. The opportunity one is that it continues its range dynamic, which is probably more likely. So we're more likely to see price go up to 110, maybe 114, or at a very lower possibility, but still a possibility, we could see price continue to suffer and go down and reach this 100 level. And if it does, then we'll probably see the Bank of Japan enter and try to say something because they don't want it that low. That's extremely low. But um, yeah, like I said, this market doesn't really interest me. It's more of a safe haven. I'll put my cash in there if there's some uncertainty, but for right now, it doesn't interest me. If we break this 105 barrier, then I will be interested again. Um, but for now, I'm not interested. USD CAD. So this is something I'm very interested in. Like I said, for this week, I'll be interested in the pound and the CAD. And right here, this is an interesting chart because if you look at the weekly chart, we're in a clear downtrend. Canadian dollar is appreciating against the dollar. However, in recent turn, because of all this tariff bullshit and Trump and NAFTA or whatever, we're seeing a lot of CAD weakness, and this is something that's been going on since February. So I think it's long overdue. I think there's a correction that needs to be made. I think price is reaching this trend line right here, and it should continue its downtrend, especially now that the tariffs are probably not going to be implemented on Canadian soil or Canadian imports. So if you look right here, I'll just walk you through the candles. This is the I'm pretty sure this is the one where Trump it hit the wire that Trump was gonna have a tariff on aluminum and steel, and the reason that was a problem for Canadian interest is because steel is the biggest export of Canada in terms of metal to the US. So we do import a lot of steel from Canada. So that in turn, or I'm sorry, what am I saying? It wasn't this one because this would mean the Canadian dollar appreciated. I think it was, I can't remember which one it was, but it was one candle where it went up tremendously, and the Canadian dollar lost value. So and then what's that's not important though. We already know that happened. What's important is towards the end of the week. So right here, 2 weeks ago, towards the end of the week, Trump had his little meeting, and it leaked from one of the people that were working at the White House that he was actually not going to implement those tariffs. So we started the week right here, right at this high right here, or I'm sorry, we at this low right here. So this is where the week started, around 128.90. You know, it went through stages of political uncertainty because of these tariffs. And then eventually, like, you know, people got optimistic on CAD, which is good, right? Because if they're saying tariffs aren't going to be affected by Canadian import, that's very good for the Canadian dollar. So then after that, you know, we saw probably some profit taking throughout the week here. But right here, this is where Canadian dollar really took a nosedive because they had some dovish comments from the Bank of Canada. And this is three over 100 pip move, which is ridiculous. Actually, like 150 pip move, which is ridiculous because they weren't that dovish. I mean, all they said is that they're going to stand back and watch the data, and that's like whatever. But what I think happened is that right here, right when Trump said he's not, or when it leaked that he's not going to implement those tariffs on Canadian soil, that was around 129.60, right? So let's just say pre-Trump bullshit price, right? So it went down, and then what happened right here probably is that the guys that went short here, they dumped their exposure here. So they did that, and obviously it went up a little bit more because obviously probably some people rode that wave too. But you can see that the price went back to the levels that it were before. So this is the level it was before, level it was before, level it was before. So this is where the market wanted to catch. So I was actually very surprised when it broke new highs here, and that was probably a more USD strength. But I took a short position actually at 175, so 129.75, and I was actually looking to maybe cover that around 120.50. So during the day I was up around 60 pips, and then after that I put my stop loss at break even. So I got stopped out at break even, and it went higher. But the reason I'm interested in this is because you can read that it's very oversold, and even if you look at the price action, like I don't really care for indicators. I just have this here as something nice to look at, but you can obviously tell this is a very overextended price reach, right? So I'm expecting for some reverse momentum here to continue on with this long-term trend. Like I said, I'm not looking to trade against the trend. Like I wouldn't go long. I would never go long on this pair, even if I saw this going here. Like yeah, this is a nice short-term trend, and if you banked on this for a month, congratulations. But I'm not interested in that. I'm interested in price. I thought this green one would prove relevance, but now we know it's not relevant, right? So this one, actually, I'm going to delete it. It doesn't matter. So this is the next runner-up, and if this one's not relevant, then I'll look at the next one. And if it's really going up there and it reaches fucking levels that it hasn't reached before, you know, maybe this downtrend has now stopped, and now we can look at this. Now we can look at this support trend as, you know, our new thing to look at. But for right now, this is proving to be valid. I hope it is valid, right? So I'll be looking to wait till price reaches about 135, or I'm sorry, 131.85, which is about 100 pips up. So either that's going to reach by middle week, to which I wouldn't trade it, at least not my full position size, because we're still waiting for that Canadian inflation data. So ideally, the setup for this would be on Friday by 8:30 or 8:20, right? If price is somewhat hovering around this trend line and inflation data is strong, right? The expectation is already better than the previous, so that could be that, you know, inflation's starting to pick up. And the Bank of Canada said they're going to stand back and look at inflation numbers and all this stuff to determine their monetary policy. This is something everybody's looking at who trades the Canadian pairs. So ideally, we're looking for price over here. High inflation data, fucking boom, short. Overextended CAD, that could be right there at 135.50. You could sell at 127.50. That's an easily 300 pip move, you know. So that's my play right there for CAD, and I'm very, very interested in that CAD trade. And I won't go into the crosses, but you know, obviously each cross has its own opportunities. I don't like to trade the crosses that much just because they're not that liquid and they're very volatile. Like for example, the average daily move of like a major pair would be 150 points, but you know, for a cross pair it could go up to 250 or 300 points. And I don't really have interest in markets like that, but if there is an opportunity on the crosses, I will take them, but I'm not going to go over them because there's so many crosses. But for example, like I said, I'm not looking at euro just because it's not at the price I want it at. I'm not looking at the commodities just because it's not a really clear direction of where they're moving. Yen does look like it's going to appreciate more. It's going to face a really big hurdle at 105, so I'm not sure how it's going to handle that. But CAD is overextended, and CAD is really cheap right now, and I'm looking to buy some CAD. So Great British Pound, Canadian dollar, those are my plays for this week. So two potential plays, which is great. If you take two trades in a week and they're winners, you get 100 points each. That's 200 pips in a week. That's really good. So think of the big picture, guys. Don't try to I'm not saying if you want to be a day trader, that's bad. But like if you want to be a position trader, just you know, think of the big picture. Really widen your time frames to understand the perspective. And I think if you do that, you'll be very profitable. So I hope you guys liked my analysis. Um, I'll be here often, I think. So if you're interested in following me, this is my Twitter right here. Um, and I just talk about, you know, random shit. So like, you know, asset manager, economist. I'm also a philanthropist. I love to help people. Why I'm doing this exactly. So I often tweet my ideas about, you know, securities, macroeconomic, and foreign policy. And if you guys do like my analysis, please leave some feedback and let me know that, you know, you guys are listening and you guys appreciate it, and it would encourage me to do more of these.